It's another great time. You know, we love this part of the week because we get to talk about, that's right, the most anticipated earnings of the week coming up. We love to do it. The week of August 17th, we'll get right into it. Definitely have a couple of key ones I want to look at, and I'll give you my opinions on some other ones here. So we start Monday with JD.com. Definitely a company that's worth obviously taking a look at as far as earnings are concerned. Because they're a company really benefiting from the current environment of everything going on, right? They're really benefiting in the online retail space because of all those sales that have shifted online. So I expect really good numbers out of this company, and I don't necessarily know what the expectations are. I do know that the earnings should be good on this company. It should be very good, and not one of the ones that I focused on today, but definitely expect good numbers. New is another one. I know a lot of people have it on their watch list. We'll be looking at those earnings to see exactly what goes on there. Eagle Point and SWK Holdings. After close, we have Best Inc. Dolphin Entertainment. Shouldn't have forgot Dolphin Entertainment. Shouldn't forget them. Sorry. Fabrinet, America's Car-Mart. Don't know about them. Is that really a company that still exists? Seems kind of crazy that they do. We've got Arco. Can anyone read that? Oh no! He can't read it. Advanced something Inc. The blurriness sometimes is rough, but it's not a company that I'm aware of. I'm not familiar with, so not too interested for me. Get out of my most anticipated. We got better ones, and RAX. The better ones come Tuesday, right? This is some big ones. These are some big ones. Tuesday before open, we have Walmart, which is one of the focus points of today. It's one of the focal points because this is a company that is expected to post an EPS number of $1.25 versus a year ago EPS of $1.27. So a very small decline in EPS, which I think would be it'd be tough to make happen, okay? It'd be tough to make that small of an EPS drop happen because of the influence this company really has when you talk about just, overall in terms of market share, right? This is a company that has to go through a lot of initiatives to take care of safety and sanitation of not only their associates, but those shopping there, and make sure everything's perfect. There's a lot of money spent on that right now, and it's definitely going to hurt the EPS line. I think it's going to probably, and I could be wrong, I think it'll be a miss on the EPS number, okay? I could be completely wrong. But from a revenue perspective, only expected a 3.7% sales growth, which again for this company is massive. I just want to tell you that right now. Company only usually grows around 1% a year because they're making $500 billion a year. So it's hard to grow by over 1%. It's really hard to grow by that. And the thing is, I think they're going to. They're expected a 3.7% growth. This quarter, I expect is going to be a massive one for them, and I likely am anticipating seeing a over 5% growth year over year. Over 5% is what I'm expecting. And I do think they're going to double online sales during this period too. I think you're going to see over 100% gain in online sales. That'll be including online grocery pickup, by the way. You got to mention that OGP is a massive area for this company. And it'll continue to be, especially with everything going on. And just in general, online, the e-commerce sales will be through the roof, all combined over 100% in my opinion. So, I'm very much anticipating Walmart earnings. Again, this is my largest holding technically. I had close to 60 shares at this point. Up very big on the position, and I love it. And I'm very excited to see what happens. But I expect really good numbers. Home Depot, you're in the same boat. I expect really good numbers out of you, Home Depot. I think you will, because if you look in terms of trends, even if you look on Google Trends, which some people do sometimes, gardening is one of those sectors that is selling a lot. There's a few that are underperforming, right? Clothing, not performing well still, regardless. But there are areas that are really performing well in your consumables and your gardening. They are performing super well, which, all things considered, is a very good sign for Home Depot. It's a very good sign. This is obviously the number one home improvements company out there. It's the number one. Home Depot should have a really good quarter, but again, I think EPS takes a hit. But overall, revenue going to look good. After them, we have C. We have Advanced Auto Parts. Kohl's. Kohl's is one that scares me, obviously. You're going to see revenue declines of over 30%, likely 40%. Definitely a scary number, but the stock's still hammered so hard I don't think it's necessarily going to go down that much more. We have Dagon New Energy, GDS, Kutech, definitely an interesting name, and it's one I'll be looking at for sure. You got to look at these earnings as we do. Lexin and CMT, or CNT, sorry. So I think it's CMT, sorry. And then after close, we got Agilent Technologies, Lazy Boy, which is kind of random, but I just experience in life, thinking about home offices, everything going on right there. Lazy Boy likely does see a benefit from chair sales as far as office furniture is concerned, so office chairs likely see a benefit from Lazy Boy, so keep that in mind however you'd like to keep that in mind, I guess. After then we have Cree, Jack Henry and Associates Incorporated, not too exciting. Supernus, more like Super Anus. Adtalem, ADTLALM, ALEM, Global Education, LifeVantage, and Orbital. I don't know. Wednesday, important stuff. Wednesday too, very important stuff, right? This is big. This is big stuff. Lowe's. And then guess what? I have the same thing that I'm saying with Home Depot. Lowe's is going to be doing huge numbers. Very good numbers. Expect sales growth. It's hard to say. Obviously, traffic will be down, but I still expect sales growth year over year. That's all I can tell you. Sales growth should be very good. People are spending a lot of money right now, in case you were curious. People getting unemployment money, buying stuff because they have so much money they don't know what to do with themselves because they're getting paid way too much. And people with, obviously, their stimulus checks, first and second round. Or first round, I should say. Maybe second round eventually, but hopefully not. After them, we have Target. I do want to definitely talk about Target too, because this is another massive company to talk about, right? EPS is expected to go to $1.58 versus $1.82 a year ago. Nothing crazy there, but I could see him hitting on that. It is a decline year over year. I could see a hit. I could see a miss. But all things considered, EPS line isn't one I'm necessarily as concerned about. I'm more concerned about the revenue line, obviously. So, sorry, stretching. I had to get my phone real quick. From a revenue perspective, they're expected to grow 8.2%. I think that's going to be closer to likely a 10% gain, and I think a majority of that's going to be in online sales. E-commerce is going to rise over 100% on this company. Certainly, definitely on the forefront of e-commerce for the original OG retailers is Target, right? They are on the forefront of e-commerce growth, obviously, because they do a lot less in terms of dollar amount than a Walmart, but their online services are just fantastic. You want to look, obviously, with these earnings, I'm going to look at shipped subscriptions. They will give the numbers for shipped subscriptions or same-day delivery. Very important to look at. I feel like I'm slurring all of a sudden. I don't know why. Or I'm having a lisp. I was anti-lisp there, just so I didn't have it. I expect sales growth of 10% again. Overall comp sales growth of 10%. And then e-commerce over 100%. That's my opinion. But I do want to look at shipped subscribers as well. I got to know who's in the service. After them, we have TJX. Analog Devices, nothing major to say about this chip company. Just a consistent, pretty decent one. VIP, QIYWI, Sharps, 21vianet.com, and Polypid. Polypid? Okay. After close Wednesday, another really good one to look at is going to be NVIDIA. Really one of my favorite tech stocks out there, likely in my top 3 favorite tech stocks for many reasons. First off, you look at this EPS line, and expected to post an EPS of $1.97, which grows from $1.24 a year ago. That's massive growth, and I think they certainly have the ability to do it. Now, what I do like here as well is the expected sales growth year over year of over 30%, right? They're going to put up $3.65 billion, supposedly by average estimates, which I think is massive. They don't give me the year-over-year comparison, and I don't know why, but for the full year, they're expected to grow 34%, which is very big. This company's just doing some good numbers, and it'll continue to do good numbers, and it's very well diversified. So that's why this is a very big earnings to look at, in my opinion. You really want to look at NVIDIA earnings because it's a very nice tech stock. After them, you see Synopsys, L Brands, expect some bad numbers. Argimoto, SQM, Nordson, and Go Health. Thursday, not quite as exciting, right? Not quite as exciting for us, but it'll be okay. We do have some good ones, as in Alibaba. People are very excited, obviously. Alibaba Group, kind of a very good position for everything going on right now. So, big numbers, revenue-wise, should be big for them in terms of growth. It should be big. We see BJ's, Estee Lauder, Opera. You don't even think the service exists, right? That's kind of weird to me. When you think of browsers, when's the last time you ever seen Opera on anyone's computer? Has it been 15 years? Yes, it has. No one uses the service. Okay, maybe I'm wrong, but I just feel like I've never heard of this in a long, long time because it's not a good browser, in my opinion. I did not enjoy it when I had it on my computer. Chrome's way better. Just throwing that one out there. I'll even use Microsoft Edge first, which I know is saying something. But it's okay. We have Melco Resorts, LZI 111 Incorporated, Leju.com. You gotta love them. And then at the very bottom, you see a flag with an H, and it's got a Swedish name almost. A Swedish sounding name. Don't know it one, but it's a partnership, so clearly it's some sort of law firm, right? Clearly, maybe. After close, we have Ross. Don't forget it's Ross Dress for Less. Thank you very much. Not good numbers. I mean, it's going to be bad numbers. Ugly numbers. 40% decline in revenue. Keysight Technologies, GAN, OS Systems, in America Airsports. Friday, not too exciting, but there's some good ones, right? John Deere, not one that excites me too much. Foot Locker, very nice. We used to be a very nice stock, not necessarily the best right now. Not too excited for it. With sports not in the greatest spot ever, Foot Locker likely sees a hit. We got Baozun, Buckle, Despegar.com, which is, obviously some important stuff. And then I can't read you those symbols, and I don't know the company's logo. So that is what I have for you today, and I really did hope you enjoyed. I'm going to go pass out and keep an eye on these earnings.